Bluestone makes investment loans simple with competitive interest rates. Borrow up to 85% of the value of your investment property without paying lender's mortgage insurance, and no cap on existing investment portfolio size. Plus, personal Bluestone support from application to settlement. So don't wait to unlock your future. Bluestone, award-winning home loan solutions. Find out more at bluestone.com.au/investors. Lending criteria, T's and C's and fees apply. Credit provided by Permanent Custodians Limited, Australian Credit Licence 390183.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hi, good everyone. How you going? Phil Tarrant here, host of the Smart Property Investment Show. Hope you're well. Hope you've been connected in with Smart Property Investment. It's been going off the charts the last couple of weeks. So remember, just as a reminder, it's out, it's there, it's ready. You've been asking for it for years. We've now made it available. The spreadsheet that we use here at Smart Property Investment to manage our own portfolio is available for you for download. This is a great initiative, and already there's people right across Australia getting access to this sheet. So this is the tool that I use to make sure I'm running our portfolio effectively. It looks at it from a debt level, a yield level, a P&L level, and also a balance sheet level. So go and check it out. It's a Smart Property Investment Portfolio Spreadsheet. All you need to do is go to smartpropertyinvestment.com.au. You see on the homepage, it's a big thing that says download the Smart Property sheet. We've done this in conjunction with our friends over at Atlas Property Group. All you need to do is click on that button and you can download the spreadsheet there. Any questions at all around it, you're more than welcome to get in touch with us here at Smart Property Investment. You can email editor@smartpropertyinvestment.com.au. It's all in there. It's all pretty self-explanatory. There's some example properties there. So all you need to do is fill in your numbers and you'll start getting a real world picture on your portfolio. I hope you enjoy it. Remember, smartpropertyinvestment.com.au. Joining me in the studio, Rasti Vaibhav. Rusty, how you going, mate? You good?
I'm very well, thank you.
So first time onto the Smart Property Investment Show, but long-term listener. Have you tuned into this before, have you?
Yes, I have. I'm a big fan of your podcast series.
It's nice to hear. When do you normally listen to it? Is it when you're driving in the car or doing some other stuff?
Driving in the car, or maybe just doing some administrative work at my office. So yeah. I just tune into it.
Okay, that's cool. And property investing, what's the backstory? How'd you end up in property investing?
Sure. I have been always passionate about properties. I always wanted to be an architect, and actually I turned into an architect.
Okay.
So passion for properties just because of its, I guess, tangible nature, like you can touch and feel, as well as like it's a great culmination of science and arts. Science are actually the engineering part of it, and also the artistic part of it that you can touch and feel and live into it as well. So properties has always been my passion, and so has been the investing. So I really want the hard-earned money to work harder. And no better way in Australia to make properties passion as well as investing passion in property investing.
Yeah, and it's a good point. Property as an asset class. Look, we're done at the death on Smart Property Investment. The sort of shares versus property or other asset classes. One of the great empowering mechanisms of property investment is that you can leverage, i.e., you can secure finance against it, which isn't often available in other asset classes. Point number two, the fact that we have this great thing called negative gearing here in Australia, which allows you to claim tax deductions on certain parts of property investing. So you are a business person. And for a lot of people that come to Australia are sometimes gobsmacked by that particular taxation setup. And the fact is, it is an empowerment for Australian property. Where's home originally for you, Rusty? How did you arrive in Australia?
Sure. I grew up in India,
Okay.
Moved to Singapore for a few years, and then moved in Australia for the search of better work-life balance.
Yeah, sounds pretty good. And did you study abroad or did you study here in Australia?
So I studied actually all over, actually. I started in India as an architect, and then did my master in computer science in Singapore.
Okay.
And then did my MBA from AGS in Sydney, as well as Chicago Booth Business School, US. So.
Oh, really? Okay. So architect becomes computer science, becomes, a business degree. Living in Singapore, that's a big shift from India. Did you go there just for the purpose of studying?
No, so I actually went there for a job there.
Yeah.
And then realizing that the power of education, like having a formal education, is key. We don't really have to go and work out on our own way. That's how things work. We can actually go and work with an expert or get into a school basically to learn from the experts and then take it from there. So that actually has been my mindset all the while. And to answer you, I was there for 6 years from 2000 to 2006.
Okay. Wow. And then straight from Singapore to Australia to do
That's right.
Your MBA, did you say you did?
No, I moved here as a skilled migrant in 2006.
Okay.
Worked for a couple of years in IT industry. I was actually leading one of the business units here in Australia. And for my passion to make money work harder, and because I was investing on the sidelines, again, with the same mindset of learning and doing it in a best way, I choose to go for MBA in finance degree, and then the rest is history.
There you go. So you collected some big degrees along the way. So you arrive in Australia for a job as a computer scientist, so doing computer type stuff, IT. How sort of far through that journey in that new job, living and working in Australia, did you start investing in property? Like what was the first bit when you went, oh, property investment, what's this?
Sure. Like I'm always a big fan of having a clarity of the end goal, like where I really want to end up. And first of all, the question was basically, should I really be investing or buying my own home, or should I be really investing in myself?
Yeah.
In 2007, I decided to go for investing on myself. So I actually went for full-time MBA, so quitting my job, letting my wife support the family. And then I was so much focused on my studies, full-time MBA, not really easy. And then just coincided with the GFC as well. So it wasn't really good timing from our perspective. But then I had to actually support it with CFA, which is a designation which actually helps you manage money. So long story short, when I actually started working with Westpac as an equities analyst, that was a time when I did really have some capacity to borrow money. And then it was the question that I had was that, should I really go for a home or my investment property? Again, as I said, end goal is about having both the money for the retirement as well as the home. I decided to go with the path of investing first.
So you finished your MBA and then got a job at Westpac doing stuff to do with money. It was at that point in time so how long did you have your feet under your desk at that job in Westpac when you started pondering these questions around, do I buy a home to live in or do I start investing in property? Where were you getting your information at that point in time?
Oh, look, I'm a big fan of studying and listening to all sorts of like webinars and workshops and podcasts and whatnot. I was actually there only for about 6 months. Wasn't really collecting enough money in my paycheck. But then because of being strategic, thinking about the long term, that thought has always been there early on. But having said that, before already I was actually investing in share market and mutual funds as well as properties back home.
Okay. Oh, so you were investing in properties back in India, were you?
That's right.
Was that with cash or sort of were you getting finance for properties in India?
The same thing, that leveraging there as well, yes.
Okay. So you decided to start investing in Australian real estate, and let's get into that because that's what I know most of our listeners want to know, what you bought and where and that sort of stuff. We'll just go to break beforehand. Back in a moment.
Whether you're a seasoned property investor or about to buy your first property, finding the right investment property to buy in 2021 isn't easy. Why do it alone when you could partner with award-winning buyer's agent Paul Glossop? Over the last 10 years, Paul has helped hundreds of clients build multi-property portfolios. Paul's secret is finding off-market bargains that get snapped up before the general public even gets a sniff. Interested? Head to purepropertyinvestment.com today to schedule a strategy call with Paul Glossop.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show. I'm with Rasti Vaibhav, talking through his journey through academia, undergraduate degree, master's degree in computer science, MBA, working at a bank, going, hang on a second, someone's got to be better here. So you're investing in other asset classes. So there must have been a point in time when you went, well, let's not worry about managed funds. Let's not worry about equities. Let's actually look at property. Tell us about your first property that you purchased.
Sure. As you mentioned before, like it's all about the leverage. So yes, I was in love with share market. That's what I was doing in my full-time job. But then with the leverage, properties, as we know, 10% can get you the whole exposure. That got me thinking. The first question was, should I really buying my own home or investing? Investment was the option that I picked. With regards to my first property purchase, like I was still new in the market. Like how do I go about researching? Believe it or not, I actually spent about 14 months learning about Australian market, how investing works in Australia. What are the pitfalls, what are the challenges, what are long-term implications of any decision? And that was the reason why I was able to make right calls at that point of time then. Of course, if I look back, I would have certainly done things differently.
Well, we'll get into that. So we'll talk about your first property, just so I'm aware of it now. How many properties in your portfolio to date?
I got 15.
Okay, 15 properties. Okay, so whether we'll get through all of them, I don't know. But tell us about number one. So you spent 18 months getting the confidence to actually take action and invest in property. So your first one, I imagine, was a good one. Where was it? What was it? How much did you spend?
Sure, it was 14 months, by the way. So,
14, yeah.
So because of my architect in me, really wanted to design something first of all, right? So the passion of designing and owning the home, like emotionally, I was attached to it. My first property was in 2011 when it was not really too, I guess, the emotion, it was not there. Like people were like really challenging why I'm actually going for investment property at that point of time. Just people coming out of GFC, they lost the, I guess, momentum of property investing, I believe. So I actually looked around. Being Sydney sider, I really wanted to remain close to Sydney. So I actually went to Newcastle.
Okay.
So I actually went to buy a piece of land over there in an upcoming estate over there called Sanctuary in Fletcher suburb.
Yep.
I think we did well because it was more of a homeowner-occupied society. They had their own restrictions, which actually disallowed the builders to, or even, I guess, selling agents to sell off the planned properties over there. So those were the considerations that we made and got into it.
So you bought a block of land and then you built your own property on it?
Yep, that's right.
And how much did you end up spending on all of that? Do you remember?
All up, it was including the interest payments and whatnot, like it costed us $440,000.
Okay. Do you still have the property now?
Yes, I do.
Okay. What sort of valuation you reckon you'd be getting on it?
It's coming at about 680, 685, if I'm not.
Okay, great. All right. I'll ask you at the end of it whether or not you do that differently because I think you might have. All right. What was after your Newcastle property?
Yeah, so then it was more around like, what should I be doing? Like, didn't really had much of borrowing capacity. Then we went for off-the-plan unit in Campbelltown.
All right. When was that?
2013 it was.
Okay. Off the plan in Campbelltown. All right. Do you still own the property?
Yes, I do.
Okay. How much you pay for it?
$335 or so.
$335. Whereabouts in Campbelltown? Like smack bang in the middle of
smack bang
near the train station.
That's right.
Yeah.
Close to the hospital as well.
What do you think that's worth today?
Close to 510 or so.
Okay, 510. All right. Off the plan unit. Interesting. All right. What was the next property, Rusty?
Then by that time, I actually realized that, okay, I should not really be going for new properties. I should be doing my own research and start looking for the bargains out there. And that was the time I actually learned a fair bit because by that time I already has actually exhausted all my borrowing capacity and the cash I could actually gather.
Yep.
I had to rely a lot on the equity. Things of which I'm not really too proud of. Just to mention to the audience here, I didn't really had much money when I actually went for my first property. I had to actually borrow against my credit card.
Oh, did you?
Actually, credit cards.
To get your first one in Newcastle?
That's right.
Okay.
So because I was having a lot of conviction and I had the risk buffer there that I could actually support it.
Yeah.
Would I really recommend anyone? Probably no.
Yeah. Borrowing at 21%, right? How much did you borrow on your credit card? Do you remember?
That point of time, it was $90,000. So it was around 4 credit cards that I actually used, line of credit and whatnot.
Right.
Having said that,
$90,000 on credit cards. Wow.
Having said that, it was actually on 0% balance transfer rates, which I was actually just softening it around.
Oh, you'll just keep transferring them. Okay. All right. There you go. Well, yeah, got to be organized to do that. So what you're talking about there is where you just keep porting it to different credit card providers, staying with them 6 months, moving in.
Exactly right.
All right. So eventually the debt catches up with you, right? But,
so as long as you know what you're doing and you're systematic and disciplined with your with your numbers, you should be all right. That's my take.
So that was on your first property. Eventually, once you built it, you refinanced it, did you? And
So it was easy. Like $90,000 it came out very quickly within when the property was built. Paid off very quickly. Didn't mind it continuing that, which actually gave me the balance for next purchase in the Campbelltown as in the unit.
Okay. Did you do the same thing?
No, but I didn't really pay it back.
Deposit. Okay.
I didn't pay it back, but actually went in the property a bit more harder.
Well, hats off to you for following that particular strategy. I'd probably, I'm not in the business of giving recommendations, but I'd urge caution for a lot of investors if you get down that pathway to try and use credit cards for deposits. It can be done, and no doubt you're one of the good stories of it, but I've heard a lot of stories where you got to be so organized to actually play that effectively. But
I wouldn't recommend to anyone, by the way, at the same time.
You wouldn't recommend it?
No,
okay.
I wouldn't.
I'm happy you said that. Yeah. But this is, experience is one thing, but, it can be quite a risky enterprise. Okay, so the third property after your Campbelltown off-the-plan purchase, what did you buy?
I bought one existing home in Blacktown, LGA.
When was this?
2015.
2015. Whereabouts in Blacktown did you buy?
So this is a little suburb called Durrock.
Okay, I know Durrock.
Yeah.
Out near Mount Druitt.
Yeah, next to Mount Druitt.
Yeah.
Now, because there was no emotions anymore after this two purchases, I realized that the best way to make money is to buy well and not really pay premium.
Yeah. How much you paying direct then?
So this property was listed at 360.
Okay. So a house?
Did my valuation, came out to be at about 410.
Yep.
We bought it at 386.
Okay. And today that place is worth?
710 or so.
Yeah, 710. So outside of the housing commission area?
That's right.
Or is it?
Yes. Yeah.
Okay. So the different parts of Durrick. And now Durrick, like there's some properties going like $1 million.
I know.
In Durrick. And what we're talking about, so if you know, most people know Mount Druitt, so it's just for your geography, Mount Druitt and St. Mary's. You got places like Durrick, Whalen. What else you got out there? Plumpton. These are sort of all surrounding areas, which have all done well. I know a lot of investors who bought at that particular time who have done exceptional, even though might not be some of the most prestigious back then suburbs in Sydney. It was sort of lower sort of socio-economic. It's quite a fair bit of housing commission stuff out there. But, investors have done very, very well up there. And I'm happy to talk about that. I grew up out that way. So I'm a proud Westie through and through. So after Durrick, where was next, Rusty?
So by that time, I actually have learned a lot about like how we can actually add more value. And renovation was one of the easiest way that I thought that I could actually apply. So I started looking for renovation projects. So went to Central Coast and bought up a DC estate in the suburb called Halekulani, which is next to Bajivoi.
Yeah, okay. Bajivoi. Where's it? Halekulani?
Halekulani. So next door suburb to Bajivoi.
I know Bajivoi,
Yeah. It's pretty much the next suburb.
Yeah, Bajivoi cool, right on the lake. So when was that? 2015 still?
15
yeah,
stuff,
okay. So you bought a reno block. How far from the water was it?
Just one street away.
One street away?
Yeah.
Okay. I know some people have done well around that particular area. So what did you buy? How much was it?
We bought for 308,000.
Okay. And how much work needed to be done on it?
So we went with a simple strategy of only putting 10% from our pocket, and we just actually went by and smacked on 30,800 as a rule that we should be spending on that.
Okay.
So we were constrained by the budget as a rule. Yep. Not that we didn't really have much money then, but we were following the strategy of putting 10%.
How'd you come up with 10%?
Oh, this is coming from the guidelines from the renovation course that I did with Rasti Vaibhav.
Okay.
Her take is that for any renovation, we should not really be overcapitalizing and going beyond 10%.
Okay.
Because the marginal return just goes down after that.
So but if you have 30 grand to renovate a house, if you do a fair bit of the grunt work yourself, money goes quite a long way. So what did you do for this particular reno?
Pretty much. The bones were strong, but what we did was basically renovated the bathroom, renovated the kitchen, of course, new flooring, a new lick of paint.
Yep.
And of course, the backyard was pretty huge, more of a jungle over there, so we cleaned it up as well. And just by paint and everything, and putting a driveway actually made a lot of difference. Huge difference.
How much work did you do yourself versus using contractors?
So whatever we couldn't really do ourselves was outsourced. So me and my nephew, thanks to him, we together used to go out there over the weekends. Did the hard yards, straight from Friday afternoon, we used to go straight to the Central Coast, come back.
Did you pay him? Did you give him some money in his back pocket to help out?
We were working together, so for sure.
And you still own that property today?
Yes, I do.
Okay. Have you ever sold a property?
No.
Okay. All right. So I want to ask you, that sounds like you haven't sold it. All right. So you still own the property today? And I reckon
all of the properties that I have been bought with the intent of holding it forever.
And was that a 3-bedroom house?
3-bedroom brick home.
Okay.
Yeah.
And today, what do you think that's worth?
By that time, we realized that we won't be able to borrow anymore. So the intent of doing that property was basically renovation, adding value, as well as putting a granny flat.
Okay.
So the next thing that we did was basically putting a granny flat there.
Okay.
So idea was to basically bump up the cash flow. I started giving about 21 or 22K every year since then in pocket. Balancing it out, the other properties that we had were more of a negative geared. So that actually balanced it out so that we can go to the bank again. So to answer you, we spent about 340 out there to buy and renovate, and then another 140 for the granny flat.
Yep.
That's
a decent granny flat for 140 grand.
Yeah, I'm including everything in terms of the driveway and the whole thing around it. And that's a pretty good one. It actually rents more than what the front house is actually renting it out for.
Yeah.
So giving us a very good rent in pocket every week. And the valuation, the next door properties are actually selling around 750 with that kind of a potential.
Okay. Great. So you've done well. That's it. So this is buy a block, renovate with the purpose of also putting a granny flat on to increase the cash flow on it. Okay. So what was after the Central Coast Bajivoi property?
Yeah, then we had to start looking a bit more interstate. Went to Queensland. We bought a few over there. Came back and did on the regional areas here in New South Wales. So
Okay. Whereabouts in Queensland did you buy?
So we went to Logan Lee, as in the local the Logan LGA.
Yep.
So it was again a big block, 950 square meter hot block.
Yep.
With the potential to add granny flat,
Okay.
which we actually ended up doing it as well.
Plus granny. Yeah. Good. And then after Logan Lee?
We actually started buying few over there
Okay.
just because the timing, like
Just around
2015,
Logan.
16. Yeah.
Okay. Yeah. There's we were sort of buying quite a lot up there, and not a lot has happened since, but now things are starting to spark in Brisbane.
Yeah, no,
Finally.
Oh, look, for me, the way I was looking at it is more of like, we don't really want every player in the team to go and start scoring. It's like, for me, those properties over there were more of a defensive play.
Yeah.
So, for example, in 2017 to 19, when Sydney market was not really doing too good, the properties in Queensland were actually holding very well and giving us the confidence that it's all about diversification and their turn will come. And this is exactly what we're seeing now.
Yeah. Okay. And then, so you said you went regional after that. So what locations did you go?
Yeah, so we continued to buy over there and around Brisbane. So, for example, Ipswich, Logan, then a few in Moreton Bay as well.
Yep.
Then came back here, did bit regional in Goulburn, down on the way to Canberra from Sydney.
Yeah. What'd you buy in Goulburn? What sort of stuff?
It was a pretty small 3-bedder home
Yeah. Okay.
next to Housing Commission area. We saw good value out there. Value was about 250, 260. We paid only 210.
Okay. That's good.
Value is already about 390 in few years.
Yeah. Okay. And then after Goulburn, or is that the end of it? Or is there still some more?
Yeah, so the idea was basically to build up to a particular level.
Yeah.
Like what I was following was a strategy of building our portfolio up to $5 million. So it was not really driven by the number of properties, but rather the safe or diverse portfolio for $5 million as a strategy and to stop over there. So by end of 2017, the last quarter alone, like we bought 3 properties in Moreton Bay and Ipswich and, as a combination.
So Goulburn was the last property that you purchased?
The last one was in Caboolture, so as in like Moreton Bay.
Yeah, okay, cool. Yeah. All right, so to get to a $5 million valuation, so let's have a chat about the portfolio now. Let's go to another break. Stay with us, back in a moment.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show. I'm with Rasti Vaibhav, talking through, the portfolio construction. So this is a pretty strategic approach you've taken here, Rusty, to build out a $5 million value portfolio. So why $5 million? Why was that the goal that you were targeting?
Sure. So I always start with the end goal in mind. And the idea was that, okay, what is the sort of passive income I would like to generate from the property portfolio? So my number that came out around then was working out as about 150K.
Okay.
And the idea was that, okay, how do I go about having that portfolio of 150K being generated by the portfolio, right?
Yeah.
So idea was that, like, basically if I take about 4% net yield, then basically I'd need about $3.75 or $3.8 million portfolio or so, fully paid off. And there has been a lot of debate whether positive cash flow versus negative cash flow as a properties. My take has been that it should be more of a portfolio, because once we are able to build that portfolio and give it enough due course of time and patience around it, it might grow. And as long as we can manage to sustain that portfolio with our savings or the cash flow that we are generating out of it, it's a matter of time that the portfolio will grow.
Yeah.
So my idea was that, okay, if I build $5 million portfolio, let it grow by 80% or so, that gives $9 million. Once I get to that stage, whenever it does, I'm not really saying whether it takes 6 years, 8 years, or whatever years, whenever it gets there, I would be able to deleverage and live off my fully paid off, debt-free portfolio.
Okay.
So it was more around the anticipation that, okay, I really need 150K.
Yep.
What's my end goal? Then working it backwards.
So that's a very sensible way to go about doing it. And anyone who is a good property investor sees the world that way, as in they work out, well, why am I investing in property? Well, it's to create wealth. Okay, why are you creating wealth? For a point in time, you probably want to stop working. So how much money do you need in your back pocket? For you, it's 150K a year. Whether or not it's still 150K a year, I don't know. We're going to have a chat about that. But so right now, the portfolio is worth about $5 million, you reckon?
Yeah, so it has, of course, grown a fair bit because I stopped at 2017. So 3-4 years, didn't really happen much for my New South Wales properties. But overall, like, it's very much sustainable and it's growing Look, the thing is that, as we all know, that property market is not straight line growth.
No.
It's just a cyclical. And on average, long term, it actually still grows.
Yeah.
So as long as we can take the dips, sustain it, we should be all right.
Yeah. And how much debt on the portfolio at the moment?
So because I stopped buying, the leverage is actually coming down by almost every year.
Yeah.
Roughly, I think it's about less than 70% now.
Okay. 70%. So 70% LVR.
Maybe around 65% or so.
Okay.
Yeah.
No credit card debt?
No.
No, that's all gone.
I still hold them just because of my Qantas frequent flyer points. It's a freebies.
Yeah, and it's actually not a bad strategy. I pay for everything on my credit card. I get Qantas frequent flyer points. Not that I can use them much at the moment, but they're nice for upgrades interstate. But so that's it. No more buying a property. You said you finished when you hit where you wanted to be. You haven't done anything subsequent to that?
Not yet, but I think given that where I am now, I don't really mind speeding it up instead of letting the time do its magic. I don't really mind getting into a bit more active strategies like developments.
Okay.
So I've been studying them. I've been working on it. Almost got into a project as well. Just didn't really happen just yet, but I'm very patient in terms of the timing of it as well.
And one of the great things that property allows you to be is patient. As long as you build out a good portfolio to start with and you can hold it, you don't need to be too concerned by it. How you go on sort of managing the portfolio? Has it been relatively easy? You use property managers at all the different locations?
Sure. I'd really take property management and the other stakeholders very seriously because this is my business now as a $5 million portfolio as a business. So I do really take care of the tenants and the properties as well as the property managers. So wherever I have properties, I actually chosen to take effort to find the right property manager. Yeah. And it's more about the relationship with them because at the end of the day, if it's a very personable relationship, they actually,
like you more. Look after you more.
So true. So true.
And the portfolio itself now, sort of 60, mid-sixes, 70% LVR on sort of 5 mil val. Where does it sit from a taxation point of view, pre-tax? Is it positively geared or is it about neutrally geared?
I have never been too worried about which way there it is. But to answer you, it's actually positive now.
Okay.
Yeah.
So it's already put money into your back pocket, which is, I guess, a good thing.
Yes, it is.
But you got to do something with that money. But so property manager, how about mortgages? So give us a sense for the type of lenders you have as part of this portfolio. I think you said it was 13 properties, 15 properties? 15. All with the same lender, all with different lenders? How have you structured things?
As you know, Phil, there's a bit of strategy as well to go out and borrow money as well. And the basic rule, or rather unsaid rule that I actually learned about is to diversify your loan exposure as well so that you don't really become... You still have basically bargaining power. So never to cross-collateralize, a typical mistake that I see people making. Yeah. And having a limit of exposure to a particular bank as well. So give or take about 1.3, 1.4 mil is probably the maximum I would go with one lender.
Particular lender. And you've got big four lenders in there. You've got other sort of lenders?
Yes, I do. So tier 1, tier 2 as well. Yeah.
Okay. Oh, that's good. So you're happy? Does it keep you awake at night, your property portfolio, or it's sort of, you don't really think about it?
No, actually, it's more of a process now. Like it's at the end of the month, like I do have my tools and checklist and to look at what's really going on with my insurances, with my property managers and right. So it becomes more systematic, like you get used to it. Like I do have, because of my background in IT, I built some models as well and take into it. It gives me a bit more exploration as well of where the cash flow is going. So I'm a big fan of extrapolating things with lots of assumption sets as well. Yeah. So that I know my what if scenarios as well. Because the biggest thing is not so much so about getting excited about building wealth. It's also about how do we go about protecting it. Yeah. Because, so for example, like what has happened because of COVID, like lots of people actually went and bought a lot of units just because they could see in the history, they are positive cash flow yielding properties and just go and buy. But, it's like a risk insurance. Like you seem to be wasting your money in insurance until you realize that you really need to make a claim.
Yeah. Well, I don't know anyone complains about insurance when something happens, right? They think the best thing they ever did. So it's not a small portfolio by any means, and you've been out for quite some time. If you had your time again, we sort of touched on it beforehand. Would you do things differently, or are you pretty satisfied with where you're at?
I certainly will be doing things differently. And the way I look at it is like when the analogy that I talk about is like building a tower, right? The good thing that I actually had in my mind was a clarity of how tall the tower would be looking like what sort of, I guess, the cash flow that I'm actually expecting out of it. So I knew what the end building or end tower is looking like. I would have actually speeded up earlier. So for example, instead of going with my emotional way of looking at it and buying, like buying a piece of land and designing it on my own, getting emotionally attached to it and looking at numbers on almost on a weekly basis. Versus now, if I look back, I would have taken it a bit more easy on myself in terms of what's really going on, like less anxiety, and probably buying a lot more properties which had that kind of potential to do something later on. So the best thing, as Phil, as we know, that it's more about the time in the market as well as like what growth we can actually manufacture. So for example, on a couple of properties, I did put granny flat. That was more of active development or rather active side of things. But for my initial properties, I was more interested in just buying our property rather than, I guess, having that kind of leverage later on.
It's only when you get to the point where you are, where you can look back and say, "Oh, I should have done this, that, and the other." And don't worry, everyone says the same thing. So, do you have any particular asset in the portfolio which is the jewel the crown, where you think you can really extrapolate a lot more value into the future?
So, this property in Goulburn, like I think it's pretty much of a gem over there in terms of the value that it has given to us as a portfolio diversification as well as the value we can do. This property, we have not really touched it at all. Like we thought that this tenant is paying rent to us, let them pay. Once we have this opportunity, we'll go and renovate it and probably put a duplex later on. Yeah. The tenant is still there, paying rent on time, and it has grown in potential by itself already. Okay. And the key thing is buying it right.
Oh, well, it sounds like you got plenty of options. Are you still dabbling in the share markets? You're investing in Bitcoin or doing any of that sort of stuff?
Well, I'm a firm believer that if I don't understand, I don't want to do anything on that. So property investing, yes, people say that you're putting a lot of eggs in one basket, like because I'm almost fully, I guess, invested in properties. But what I do say is that I'm actually watching this basket very closely. Say diversification for the sake of diversification is not diversification. Yeah. It's more about just getting into unknown. Like I'm still to see or hear anyone who understands the basics of the fundamentals of Bitcoin, as an example. Yeah. Yes, people are making money, so be it, right? Yeah. I'd rather go comfortably and sleep it through the night.
Well, you got to stay your own course. So what's next for you? Is it more property investing? What are we going to see in the future?
Sure. What actually I've digressed a couple of years ago is basically because I've built this system. I've gone through the property, I guess, the research on the region from my research background, from what I was doing in equities research. I used a lot of data points from the council websites and infrastructure and population and whatnot. And that has been the key for my success in investing, at least the confidence part of it. Now, what I'm actually doing is I'm taking this and packaging it as a service, as a buyer's agent, and offering to other people.
That's cool. Well, no doubt you'll have fun doing that. Investing in property, once people get the bug, as you know, they get obsessed by it, right? And
certainly it's a bug, as well as like the whole reason for me to switch from IT to banking sector was more from the viewpoint that how we can make money work harder. I was very much comfortable earlier as well, like as a professional in IT sector. But the idea was that how can I go and help other people as well? So that motivation, that kind of, emotion to help, because I'm coming from a very humble background where I've seen my parents struggle. And my childhood has been devoid of that parental love. I mean, love was there, but I guess I should be saying that time was not there. And what I really want to do with my services, whether working in the banking sector, which I was doing before, and now, which is more about closely helping people, because not many people appreciate, I guess, the longevity and the strategy part of it. So I really want to work as a strategist for the people, showing that the power of properties, that how wealth can be generated in this sector. So that is the thing that actually brought me back from what I was doing earlier. I was actually a portfolio manager managing $2 billion for my clients. Yeah. But now doing this, what I'm doing now, actually gets me the opportunity to serve them directly.
And where in India is home?
So North India. Yeah, so I'm from a city near Delhi by name of Meerut.
Okay. And how's the family going back in India with all this COVID stuff? Everyone happy and healthy and well?
I know it's tough out there. It's very, very tough. It's very depressing to dial back home and learn about some neighbor or some relative. The challenge with us is that we are pretty big families out there. And so luckily my mom has survived COVID, but we have to be very careful out there.
That's right. And no doubt everyone's probably very proud of the work you've done coming out to Australia and building wealth like this in property. It's a good story.
Oh, no, thank you so much. All I really want to help is basically other people do something similar, probably not spending too many hours away from the family members as well. Like for me, like I spend a lot of hours, a lot of days, traveling around. And if I can save that, and that's the thing that I was saying, you have to do something differently. That was the other thing, like leveraging the experts in the industry rather than doing it on your own.
Yeah, and look, property investment does take a lot of time, so I'm a big advocate of getting support and assistance from those who can do it for you. I hope you enjoyed that, everyone. I've really enjoyed that chat. We'll keep connected with Rusty and see how he goes as he embarks on further career in property investment. We like these investor stories, getting the backstory for investors, and everyone's got a unique way of seeing the world. Rusty is no different, so it's great for him to come in and share his journey. Heaps of other investor stories on smartpropertyinvestment.com.au. You can go and check it out. If you follow us or don't follow us on social media, that's how you get your info. You can find us at Smart Property HQ. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Bluestone makes investment loans simple with competitive interest rates. Borrow up to 85% of the value of your investment property without paying lender's mortgage insurance, and no cap on existing investment portfolio size. Plus, personal Bluestone support from application to settlement. So don't wait to unlock your future. Bluestone, award-winning home loan solutions. Find out more at bluestone.com.au/investors. Lending criteria, T's and C's and fees apply. Credit provided by Permanent Custodians Limited, Australian Credit Licence 390183.